Hello everyone, Dawn here with Hit Ralph Consulting and Business Services. We are located in Northern California and provide services in the areas of individual and small business tax preparation, small business bookkeeping, reconciling, consulting, and business analysis. Today we are going to go over a brief overview of some small business questions that we get with individuals that are new at running a small business and or want to understand how to correctly allocate transactions for tax purposes in the areas of assets, liabilities, the difference between cost of goods sold, supplies and materials, labor and inventory, and traditional office supplies and materials, along with some travel and meal expenses. Asset is a physical or tangible good that can be sold to recoup funds for the business. For instance, if the business is in hardship, if you have purchased equipment, furniture for use in the activity of business, for instance, your desk, your computer, video cameras, those are all assets to the company that can be utilized either to build the company's equity and or again, if in hardship, you could sell to put money back into the company. Assets typically have a life longer than 3 years, and it can be depreciated over the life of the item. Again, what is an asset? Furniture, electronics, vehicles, real estate, and other equipment that is necessary to conduct business, and typically has a life longer than 3 years, and the value, again, is depreciated over the life cycle of the item. For instance, vehicles and trucks, you would typically depreciate over 5 to 7 years. If you own a construction business, there's tractors, compressors, excavators. There's all kinds of things that you purchase for your business equipment-wise that you would want to utilize the depreciation for. Those are assets. What is an intangible asset? These are items like patents, the brand, your company brand, trademark, or copyright materials, along with potentially your customer list. If you are using your assets to build the equity of your company so that you can sell it, then your customer list might be a potential asset to your company, and it's just included in your bulk price. So if you're make water bottles and you're selling your water bottle company and you have clients like retail stores or wholesalers that continually purchase your water bottles, those clients are now assets because you can sell them with that customer list with the rest of the company, so that new owner can continue selling that product to those vendors and our customers. And yes, your inventory is an asset to the company. That is why it is important to track it accurately. Any product that you store, whether it's for resale or it is surplus, for office or shop supplies, it is an asset. Again, we'll use the water bottles. If you manufacture 10 water bottles and you only sell 5 of them, those 5 bottles are left in inventory. That's going to lower your taxable income because it's product that you have either purchased for resale or have manufactured, and you have spent that money to make that bottle, but you have not sold it yet. So it is important to track your inventory for that purpose. Liabilities. Liabilities is money that you owe to any particular party for either products or services rendered to you and or if you owe a refund to a customer or client. Liabilities could be utilities, rent, loan payments, credit cards, line of credits. And again, if you owe money to a customer or client, for instance, they bought a water bottle and they want a refund, that refund is now a liability until you pay the refund. Yes, assets can be liabilities if you owe money on it, and only the portion you owe is the liability. An example would be you purchased a truck for $100,000. Your asset value is $100,000. Your liability portion is only what you owe on that new truck. So, for instance, if you put $20,000 down, you only owe $80,000. So your asset is $100,000, which would be $20,000 as your down payment, and then $80,000 that is the portion of your liability. And then you're also going to put on your books $80,000 that you owe. That gets a little complicated, and we'll go over that more in detail with also some visual aspects so that you can see exactly how you would put that in your books. Cost of goods sold. Cost of goods sold are supplies and materials that are necessary to perform the job itself other than office supplies. We'll use a contractor or even a plumber. These are items that are purchased that are either in raw form or semi-finished products, or other parts, small tools and devices that are necessary to perform the job. So supplies and materials for a plumber, PVC piping, that's a job material because you're purchasing that specifically for a job. Or if you find it a good deal, this could also become inventory, because if you get a better price, if you purchase 10 of those same PVC pipes, regardless if you only need one of them, then you're going to purchase all 10 of them, and then you're going to inventory 9 of them. Raw materials, lumber, that's another raw material. If you're a fabricator, you're going to purchase raw materials in the form of steel, sheet metal, in order to fabricate whatever it is, product that you are fabricating for your client. Resin, if you're a crafter and you make little resin products, your resin is a job material or supply and can also be inventory. Again, we're going to go over some of these in more detail in another video where I'm able to give you some visuals along with the verbalization of these products. Inventory, we've kind of already gone over inventory and the importance of housing inventory. The main reason you want to track inventory, again, is because it lowers your taxable income. This is items, products that you have purchased, you've spent the money on, but you have not made your money back. And then we will go over labor. Difference between labor and payroll. So the state of California is really strict. That's where I'm from. It is very important that I cannot give legal advice. I am just allowing you or giving you the information for you to go and research this further in whatever area that you need to go research further. I have a lot of contractors that use day labor. Day labor is not a wage. Day labor is an independent contractor. You need to collect a W-9 in order for this to be a tax write-off. Now, IRS in the state of California cannot tell you that you cannot write off these items. However, If you were to be audited, it could cause you a little bit of legality in the long run. So it's always just important, as soon as you hire someone for day labor, regardless if you're going to use them for a day or maybe later down the road, $600 adds up really quickly, especially with today's wages. So just get your 1099. You can put an I-10 on a 1099. You just need to make sure you get it done. So labor is an individual that you do not pay their taxes on, regardless if it's federal or state. That's labor. Labor pays their own taxes. Payroll, you pay your portion of their employee taxes, and they pay their portion of employee taxes. That's a W-2. So that's the difference. Labor, W-9, 1099 at the end of the year. You do not pay taxes. Employee is on wages. They get a W-2 at the end of the year. You pay your portion of employer taxes. They pay their portion of employee taxes. And then regular supplies. So the difference between job supplies and regular supplies. Regular supplies would be like items that are directly associated with the operation of the office, or anything other than a specific job or jobs. Paper towels, toilet paper, regular paper that goes in your copy machine, ink, toner, tape, paper clips. Those are traditional supplies and our office supplies and materials. And then again, job supplies and materials are things that are directly associated to items outside of your office. Even if it's in your shop, it's directly associated with your end-use product that you're selling to your client or fabricating for your client. And your in-house supplies and materials can also be inventory. Again, I know it gets a little complicated. We'll go over this again in a more visual form. For instance, if you go to Costco and buy that big old package of paper towels, okay, you're not going to use all of that at once. You're going to take one out. The other 11 are going to sit over in inventory, and then you're going to replenish that as it comes about. So it's important to also house that inventory because, again, it's money you've spent, but you haven't used or made money off of. That's basically what inventory is. Another thing we're going to go over today is a bit of travel. Okay, not all travel is a business expense. Not all meals are a business expense. Just because you use your business credit card to go somewhere and or to buy something, buy a food, it does not make it a business expense. A business expense requirement is that you are conducting some sort of business. Travel-wise, you're traveling to go meet a client, you're traveling to go to a seminar, you're traveling to go get continued education, you have a job that's off-site and you have to stay for a couple of days, that's travel. Meals, I'm going to go with 2023 on meals. 2024 will change slightly. Entertainment is no longer included, period. If you buy tickets to go to a baseball game, you take a client, the tickets are your expense. However, if you buy food, non-alcoholic food and beverages, that's a meal expense. Okay, the alcohol and the tickets to the baseball game are your expense. If you take a client or employees out to lunch or dinner, the food and non-alcoholic beverages are a meal expense. If you do an employee team building, that's 100%. meal expense. So if you do like a barbecue in the park, that's 100%. Even if the employees are bringing their families, you're doing a team building experience, that's 100% business expense. Or if you do like the Christmas dinner, that's 100% business expense. Again, we will go over a lot of these a little more in detail in some breakout videos so that we can focus on the particulars in specific areas. However, if you would like to discuss your particular business needs and or for assistance in setting up an accounting system, regardless if it's manual tracking, we can help you with an Excel spreadsheet and or the good old-fashioned green bar booklets. Or if you want to get set up in an accounting software, or if you already have an accounting software and you just need a little assistance cleaning things up, we do offer training also. You can contact us for a free consultation with a number that's listed below in the comments. Thank you and have a great day.